Hello, this is Alex Kazmark for the FXEdge.com, and this is your free daily Forex video for October 8th, 2009. Quick reminder before I begin, the purpose of this free daily video is education and not an alert service. I'm not going to make any trade recommendations, but what I am going to do is point out levels of support and resistance for the next 12 to 24 hours. Please keep in mind that trading with leverage is very risky, so please don't trade any real money until you've established a proven track record of success on a demo account. Trading conditions are always changing, so make sure to watch tomorrow's video to stay updated. Okay, everybody, today's action was another day of consolidation. Recent price action has been unusual in a sense that the market looks bearish on the dollar, but isn't in a rush to push it lower. This is either a sign of indecision or consolidation before another event triggers a sell-off. Over the last 2 weeks, I've mentioned indecision as the driving force behind the recent moves. We're still to see a break above the 148.50 level versus the euro, and the sterling is still near its lows. Swissy hasn't broken below the 102 level, and the yen is in its own world aiming for the 87 level. All these moves could be setting up for a much more than a possible run to the recent highs or lows. We're still in a wait mode as we need to see more strength against the buck to really short it. As of now, there's too much talk and not enough action. We keep hearing the demise of the dollar, but as we can see from the chart, specifically the euro dollar, what we're looking at now, we reached this pivot here at the high of 148.50, but the recent consolidation move higher hasn't really made much more ground. So we really need to see much more action higher above the 148.50 level before we see much more ground, perhaps up to the 150 level, 155, 160 level. That was the all-time high set back quite a few months ago. So until we see a break above the 148.50 level, my gut is telling me that the market is really indecisive, and perhaps right now there are too many variables at play that could move this pair or move any major currency pair in either direction. So we're still in wait mode, and we're going to go ahead and cover the support and resistance levels now. On the euro, currently trading at 146.87. We had this 146.80 level of support over the last few days. We're going to keep that there, even though the market is trading just a bit higher there. Don't mind the 146.80 level as a major area of support, but that's going to come into play over the next few days. First major area, but it is our second level of support, is 146.20, followed by 145.60, 145.20, and 144.80. First level of resistance is going to be found at 147.50. We ran into that sort of yesterday. It didn't really reach the 147.50 high, but we saw that as well on the previous day. Above that, we'll see 148 and 148.50. Above 148.50, we already mentioned we're going to need to see a high of 150 and then a break above that before we head higher. Other than that, on the euro, again, we're wait and see mode. We've retraced quite a big portion here, but we really haven't seen anything really, out of the ordinary here with the relative price action that we've seen. So, not enough direction really to have a clear mind trading this pair, but again, we're really waiting to see if we can set up another one of our trades in our members section over the next few days. Next up, we have the pound dollar, currently trading at 159.62. First level of resistance could be found at 160, followed by 160.60, 161.50, 162, and 163.50. Went through these quite quickly. These are the same levels from yesterday over the last few days. We haven't really seen any changes. As you can see, the market has really been in a zone here as has been consolidating. This is what we're going to be doing here on this pair. The market is in perhaps a triangle or a wedge pattern, and we're going to be waiting for a break either above or below. And we can see that with these two lines. The blue, that's the wedge, and we have these two bottom lines. So we really need to see a break below the 157.60 level, perhaps a 158 even would even work, or above the 160 level. Now we need to see a close above the 160 level. We've had several wicks, but nothing real to really set the tone for another move higher. So we're going to be monitoring this triangle and see how that plays out. First level of support can be found at 158, followed by 155 and 153.30. Next up, we have the dollar Swissy currently trading at 103.30. First level of support is going to be found at 103.20. This was yesterday's level of resistance. We're going to make this now a support level, but keep this in mind since the price is very close. Be very careful considering this is a prime level of support. There's not going to be too many buyers here, but this could come into play over the next few days. Major level of support, which is our second level, is going to be at 102.40 and 102. Below 102, we'll see 101.30. First level of resistance is now going to be 103.80. And excuse me, actually, we can actually even mark this as the first level of resistance, 103.55, perhaps 103.50. We had two wicks here. We see the wick from the 5th of October and the wick from the 7th of October are all aiming at the 103.50 level. Didn't really break above that. That could be a mediocre level of resistance. So that could be in play if we think the dollar is going to lose more ground. We can play a bounce off that level. That level also played a key role several times here in mid-September. Nonetheless, another major area of resistance is going to be at 103.80, and more significantly at 104.50. Above that, we'll see 105.50. Finally, let's take a look at the dollar yen, currently trading at 88.58. First level of support could be found at 88.20, followed by 87.12. Below that, we're going to target 85. First level of resistance for the dollar is going to be found at 89.50, followed by 90.20. Above that is 90.80. And we'll run into more resistance at 92 and 92.50. Now this pair continues to make lower lows. We've been talking about this pair heading lower to the 87 level. We think it can go as low as 85. Be mindful as this could be a double bottom. We don't expect it to be, but we also have to anticipate that for the future. Double bottoms are never double bottoms until it's too late. So again, prepare yourselves. A close below that 88.20 level would be dollar bearish. And that is exactly what we're expecting. So until tomorrow, this has been Alex Kaczmarek for the FXEdge.com free daily Forex video for October 8th, 2009. Until tomorrow, good luck trading.